Welcome back to Rockstock Channel. It is Tuesday, August 5th, and I'm about to get on a plane actually to visit Rodney and Benji in Cape Town. But before doing that, I just wanted to circle back with Craig Shesky, CFO of the metals company, on the back of what was the strategy day and a bell ringing at the Nasdaq. But I've been to a number of these over the years, Craig, and this was, far and away the best. So hats off to you and your team for putting together such a, an educational but also fun and entertaining set of events yesterday. I recorded a lot of information from that event. Benji's going to piece it together into a chronological overview. I interviewed Gerard, as well as Brian Pays Braga and a few of the presentations. I just wanted to, this interview is going to largely be Rodney, who wasn't there, kind of digging into the details of the PFS that you put out yesterday and the first reserves ever for nodules. But I just wanted to share with all of the viewers out there. I met, first of all, there were 150 people there, I think, or so, and 50 of which were retail shareholders. I had no idea what a connection you had with those, or what a big following of retail shareholders. It reminded me of, the Tesla retail shareholder base, 10 or 12 years ago, that were believing in Elon Musk, a charismatic CEO, and, Gerard, radiates similar type entrepreneurship and charisma. But I spoke with people came from the UK, from Austin, from California. One guy, just got married. He made a honeymoon out of this. It was really cool to connect with them. And I'm on Twitter and LinkedIn, but I had no idea you had this award ceremony for these TMC bulls that are on stock Twits and Reddit and Webull. So I just want to shout out to all the people that I met at the event. Please feel free to reach out to me at Rockstock Channel at rkequity.com. One of you said there's some Discord server and, you want to ask some questions in our next interview. Please, feel free to send those questions to us. We'll ask them in the future. But overall, I just want to share my view. I got some cool merch, as part of that. Got this t-shirt, water bottle. I got a nodule over here, and very funny, these gorillas. You're going to see that in the video coming up. Again, entertaining but very informative. But most importantly, the content of, I got to meet a lot of members of the board, from Steve Jurvetson, and in Allseas, and Michael Hess and Andre Karkar, long-term, the original gangster shareholders who have been supporting you for a long time. And then Korea Zinc, very, very solid, discussion from the chairman there, and the relevance of the nickel smelter, that they're the large, it reminded me of like POSCO and the lithium, with Korea Zinc and the nickel. But overall, I had no idea the depth and quality of the management team, of the investors, and it's really bridging Silicon Valley, Washington D.C., Canada, Australia, for a concept, right? You're disrupting an industry with the metals company, right? It's never been done before, and this idea of the entrepreneur taking on the incumbents, like, it has to be a new company. The incumbents would never do it. Really resonated, and I just wanted to share. Like, I got the vibe was very positive, and you see the volume. You have I just didn't really fully appreciate the legion of retail interest in this stock, and the defenders, and with real solid information. Again, it reminded me a lot of the Tesla days, when Tesla was like a 40-50 billion market cap before it, rocketed in 2019 and 2020. So with that, and I love the rock and nodule, kind of analogies, the karaoke. It was very funny. I started this year, my first Lithium Bull newsletter, I used AC/DC's It's a Long Way to the Top. And right when we're ringing the Nasdaq bell, it's a long way to the top, came came on the screen, and that was one of the 21 karaoke songs for the the competition that you had. I sang that. You may see that if Benji, if it makes the final cut. But the most funny one that I saw was someone had Run DMC. It was Run TMC shirt. Your head of technology had that shirt and had a great conversation with him. So with that, I just wanted to hats off, Craig, to you and your world-class communications team, which it's always great when you have great content, but just meeting all of these, very esteemed, people and successful entrepreneurs, everyone's successful, in your group, and but they, see huge opportunity to turn this into something, very meaningful. Obviously, we got the tailwind of, Washington, D.C. behind us. There's still some pins, that you need to knock down, but, Rodney will dig into the details of, what you put a lot of information into the market. Unfortunately, the stock, sometimes it's kind of sell on the news, or I don't know what it was, but obviously the stock's come in a little bit since then. But I think I met a bunch of your analysts. I'm sure they're, going to be working up new reports. So, Dimitri Silverstein and Heike and Matt O'Keefe, I met with them and hope to interview them sometime in the future. So with that long intro out of the way, Rodney will, take it away from here, and hope all of you enjoy, this interview. I'm heading out again to Cape Town, and I'll send a message or two on Twitter from there. But feel free, please make sure to follow the Metals Company on Twitter at the Metals Co. And increasingly, I need to start paying attention to StockTwits, Reddit, and Webull, because I didn't realize Twitter is probably lagging those venues in terms of discourse as it pertains to TMC.
Right. Craig, great to have you back on again. You've just, TMC's just outlined the PFS, an 18-year mine life with a very low C1 cash costs and all-in sustaining costs for nickel, thanks to byproduct credits. This suggests that TMC will be competitive throughout any price cycle, which is always a really good feature of a project. Can you elaborate on the numbers of the PFS, and then we'll move on to the initial assessment?
Sure. For the PFS, it is a 5.5 billion net present value as of June 30. Based on that 18-year mine life, based on, frankly, what we think are conservative assumptions in terms of the amount of nodules that are ultimately recovered. We're only assuming out of the total estimated resource, less than half of those nodules are picked up. Some are set aside for environmental buffers. Some are set aside for assumptions on what collection run length will look like. And as we ramp up and get better, it's our goal to convert even more of that resource into recoverable nodules and potentially reserves as we then go towards the rest of the resource as well. But it is important to say this was the first step to show a pre-feasibility study for a nodule collection process that shows that it's commercially viable with the establishment of over 50 million tons of reserves, but also show that it is low cost, as you note, in the low first quartile of the nickel cost curve. And again, there's no magic to it. It's just a higher grade of material. Therefore, the byproduct credits mean over half of your revenues coming from things other than nickel. So it allows you to be very profitable in any nickel price environment. So that's very key. So commercially viable, low cost, very valuable, of course, with $5.5 billion of NPV, but then also starting in a reasonable timeline. And I know there are, many who perhaps on the retail side, certain listeners, maybe even attendees of our strategy day, a lot of people are hoping for, man, when can you get in production? Can you do it next year? Can you do it very soon after? We are looking at a Q4 2027 production start date. And for us in the world of metals and mining, that's right around the corner. Importantly, though, we have been, very clear with the market about a year ago that we're not going to be spending on getting that hidden gem vessel provided to us by our partner Allseas to get ready for commercial production until such time as there's regulatory certainty. Through this U.S. pivot and this executive order, while we won't say there's 100% certainty that we'll get a permit, we're feeling, and our board is feeling, and our partners are feeling, positive and strong enough on this to get back into gear and to get this project ready to go. But it doesn't make up for the fact that due to the ISA delay, there was a period where, the tools were put down on getting that hidden gem ready. And now we can ramp back up again. And that gives us the confidence to put out this PFS showing a end of 2027 start date.
And Craig, another key feature of the PFS analysis is the low initial capex compared to the after-tax NPV. Can you please just remind viewers of the planned business model and commercial partnerships you've agreed on?
Absolutely. So the PFS reflects not only the existing relationships that we have with the likes of Allseas, but also has very educated assumptions with other partners, whether it's PAMCO, whether it's Korea Zinc. It also has, I think, a very conservative outlook on, what the customer base is going to look like. So this PFS basically has given everybody the roadmap for how we're going to get in production and how profitable we can be. And that's over the course of that 18-year mine life. Steady state production we define as 2031 to 2043. So those are kind of the meatiest years where you're not ramping up, you're not ramping down. And over that time, you're looking at 10.8 million tons per year of nodules collected and a 43% average EBITDA margin. Now we would be starting a bit lower. And then once we actually are producing sulfate materials at a US-based refinery, well, then you're talking about an EBITDA margin in the high 50s. So on average, it comes out around 43%. But to get started, we are trying to do it in the way we've told the market we would for the last several years, capital light. Using that existing drill ship from Allseas, we've modeled, including a lot of contingencies, a lot of buffers, a lot of conservatism, less than $500 million of development capex required to get the project up and running. What we actually think will happen, and we also laid this out in the press release and our strategy day materials on Monday, is at a much smaller number. In fact, as little as 113 million on TMC's balance sheet prior to production to get the vessel that we already have with Allseas ready to go, maybe not at the full 3 million tons per year for that one ship, but something smaller that allows us to then ramp up, as we get closer to production, and frankly, as capital is available to us. So for us, it's more about the PFS gives you this point-in-time analysis of what the project should be. And that assumes a little less than 500 million of development capex pre-production. We think the actual number is going to be far smaller, and it's going to be shared by TMC and Allseas. There is also an assumption of 4.4 billion of development capex for 2 US-based refineries. Those refineries would take this intermediate material that we are bringing over from our partners in Asia, where rotary kiln electric arc furnace lines are plentiful, bringing that intermediate material back to the United States for refining into higher value sulfate, such as nickel sulfate, cobalt sulfate, and copper cathode. So this achieves a couple things. One, it satisfies the US government, which wants to permit us to help bring the United States mineral independence, given that the US effectively has no primary production to speak of for nickel, cobalt, and manganese. So we want to solve that for the US. They want to solve it. That's one of the reasons that we are getting the full-throated support of this administration. But that also means we have to make an assumption of, yes, one day we will be producing something in the United States. And this refinery capex, what we laid out as 4.4 billion, that satisfies that goal. But nearly all of that capex is spent in the 2030s. This isn't anything where current shareholders are worrying, what does that mean for dilution? This is something where we're going to be pursuing government capital. In fact, Jared's in DC having conversations to that effect, as I'm sure many other critical mineral companies are. We are going to ensure that the capital mix for that project and potentially the JV partners for that project, are reflecting the best possible IRR for TMC shareholders. So while you have a big chunky amount of capex in the future to bring refined material that can not only satisfy US needs, but help TMC move up the payables curve. So instead of getting a discount for intermediate product, we'll get a premium, very likely, for sulfate material, higher revenue per ton. That's all great, but I want to emphasize that's further down the road. As you note, relative to 5.5 billion of NPV today, less than 500 million of capex prior to production, that's a pretty small bill in the context of metals and mining.
Absolutely. Craig, obviously, you're looking at steady state timing and commodity prices somewhat in the future hitting steady state. How sensitive is the after-tax NPV to changes in commodity price assumptions?
It's sensitive, I would say. If you're talking about a 20% move, let's say for nickel sulfate pricing, you might be looking at a 10% overall move in the NPV. That's actually less sensitive than most projects that I was used to looking at when I was on the buy side, where if you're at the higher end of the cost curve, if you're in the fourth quartile, let's say on the nickel curve, the nickel price up or down by 20% means you're either underwater or you're doubling the NPV. Here, it's a lot tighter. And look, one also has to say, what is nickel sulfate moving in the same direction, in the same magnitude as the underlying nickel metal price, and therefore the intermediates? There's a bit of a product mix to consider. But overall, we are expecting to be less sensitive to these commodity price fluctuations than most. Now, it's a double-edged sword. Like when nickel prices will be going up as we expect them to do, as Benchmark and CRU and many others expect, given the fact that if you're looking right now in Indonesia, Shanghai Metal Markets, SMM, did analysis of total global nickel pig iron producers, NPI, most of which occurs in Indonesia. The average margin right now is negative 4%. So the nickel price right now does not support further investment, and it doesn't even support many operations continuing. One of the reasons that the prices have been low, there's been so much buildup of NPI and now HPAL capacity in Indonesia. And due to the fact that much of the higher grade nickel laterite reserves and resources have been tapped out, and the average grade in Indonesia will continue to go down, a lot of those existing facilities are going to need material. And there's an opportunity for TMC down the road to go into Indonesia for non-Chinese funded producers and find some RKEF capacity, given that they will be struggling to find high-grade feedstock, which we can provide. So we're bullish long-term on nickel prices. We don't have to be bullish on nickel prices for this to work. As you've noted, our C1 nickel cash cost on a byproduct basis is expected to be $1,000 per ton. It's expected to be $2,500 per ton on an all-in sustaining basis. The current nickel price is $15,000 per ton. And even at that, most producers of NPI and many of the Western producers outside of Indonesia are underwater. So this is going to work out. The solution for low prices and commodities is, enough of these low prices are going to drive some of these producers out of business. So for us, it's really hard to break the model, just given that the grade of the material is so high. Again, it's not magical, it's geological. The nodules happen to have high concentrations of nickel and cobalt and manganese and copper.
Which, of course, you'll have, those prices won't be perfectly correlated, so you'll have some hedge in that as well.
That's right.
Craig, you mentioned first commercial production in Q4 2027, or that was the presentation. What is that start date contingent on? What needs to happen for everything to fall in place by then?
That is contingent on our commercial recovery permit being granted, which we fully expect. And also, it's contingent on us getting that hidden gem vessel ready in time for commercial production. We could, of course, just tell Allseas, get ready, just pull it out of layup, and let's get it going with the existing pilot collector that we use in 2022. We're not out there just trying to say what is the quickest date we can get going. We want to get going and become profitable as soon as possible. So there is this equation of what is the right time, but what is the right maximum capacity for that vessel to ensure profitability. And for that, we have to make some modifications, as does our partner Allseas, just to make it higher capacity by putting in a wider riser pipe, a more powerful compressor spread, 2 collector vehicles, each of which would be bigger, 15 meters each, than the initial pilot collection system, which was less than 10 meters. So that is some of the work that is being done. And the good news is our prior view, and through the ISA process, it was more of a sequential timeline where first you get regulatory certainty, and then we begin for commercial production after that point. And part of that was driven by the fact that we didn't quite know when that regulatory certainty would come. Through the US process, it has clearly become a question of when, rather than if, we get this permit, in our view. We believe it's coming. We believe we have not only the full-throated support of this administration, but we have the scientific data, the environmental data set going into our environmental impact statement, that is going to give confidence to future administrations as well. The data is quite clear that this can be done quite responsibly. So it's a matter of running that trap and running those traps and ensuring that that legal process as laid out by the NOAA regulations is followed. So there are certain steps that you don't want to skip over. There's some legal process and sausage making, if you will, that needs to occur to ensure everybody has had eyes on it and that it's been open for public comment, and that there's a sufficient amount of time for the general public to share their views. But we think we know what the answer is going to ultimately be. So for us, now we're at the position where we can put things on a parallel path. It doesn't have to be the sequence of first comes the regulatory certainty and then you start getting ready for production. We believe we can do both at the same time now. And that's why we have the confidence of saying Q4 2027, even though it might be some time before we get the actual final permit from NOAA for commercial recovery.
Right. And you did an initial assessment, or IA, that you've completed, covering the rest of the resource in the Nori and Tomel areas that has a substantially higher NPV and IRR, but also higher capex. The IA is effectively phase 2, the way I read it, with funding coming from, phase 1, the PFS, cash flows. Can you talk us through the business plan?
Absolutely. So, yeah, phase 2, and we're going to try to, get phase 2 to happen as soon or during, the timeline of phase 1. For that initial assessment, it's basically extrapolating many of the same assumptions of contracted service for our operations, and bringing in what we think is going to be a growing ecosystem of vessel providers who see deep sea mining as the future, a way for them to diversify away from, let's say, oil and gas, and perhaps those vessels, which could be purpose built, have higher capacity, and they might have 3 collectors on them or even 4 collectors on them. Now, we assumed in the initial assessment 3 collectors per vessel. We assumed maximum sort of nameplate capacity of 40 million tons of nodules per year, as opposed to 12 million tons per year nameplate capacity for the PFS. But we're not making any Herculean assumptions. We're not going out over our skis. We're taking a lot of the same basic math from the PFS and then running it for the model outside of NORI-D, which is right now less than a quarter of our total resource. So yeah, there are a few different assumptions. It's a cleaner offshore transfer process where you're basically sending everything first to Indonesia for intermediate processing and then to the United States for refining. We also do make more conservative assumptions on metal prices. Given we expect to be such a large producer in this initial assessment model of manganese, our view is, yeah, we should do a reduction to our assumed manganese price. And we do exactly that in the initial assessment. We cut our manganese price by approximately 15% in what we are running versus what we actually high teens percent versus what we were running in the PFS. And still we get to that 18.1 billion NPV. So across the areas known as Nori and Tomel, over which we currently have exploration contracts, on top of that, we've applied in that same ground for exploration licenses across the same Nori and Tomel areas. And now, of course, we have sponsorship agreements with Nauru and Tonga, just showing the strength of that support. And that's important for the U.S. State Department to see as well, that a couple of Pacific Island nations are really working with us hand in glove. That's very important given some of the geopolitics going on in the Pacific right now. We have 18.1 billion of NPV in that IA. We have 5.5 billion of NPV for the NORI-D area in the PFS. Add it together, the total NPV from these 2 economic studies released this week is $23.6 billion. So if you put a reasonable multiple on those 2 studies, let's say, you're slightly on the higher end of the peer range for explorers and developers. So take 60% of the PFS value, take maybe 35% of the initial assessment value. That would get you to a 10 billion market value today, or, over $20 a share. And then, of course, once you start producing, producer price to NAV is much higher than that. So there's certainly a big resource to grow into. And by providing that initial assessment, yeah, it's not at the same level of confidence as a PFS. Yes, it's further out, but still we're giving the market some guideposts on, well, if the PFS is going to be worth X, here's why the IA should be worth Y. And you can get confident in seeing what this valuation roadmap is going to look like as we step further and further and closer and closer to initial commercial production.
Right. And then lastly, Craig, you touched on it earlier, but your April 2025 application for commercial recovery permit, have you got any sort of update or ideas on how that's progressing?
Yeah, we have. We have regular communication, a very frequent communication, not just with NOAA, not just with the Commerce Department, but Defense, National Energy Dominance Council, the White House itself. We feel very good about where it's heading. There is, I think, sometimes a delicate dance between what should we say publicly and then what shouldn't we, in terms of where are we in the review. We did announce that we got to substantial compliance on the exploration license applications quite some time ago, many weeks ago. And we like where this is heading, but we're going to hold off on saying too much until we report earnings, which is going to be August 14th next week. And we'll give you a better update then. I just don't want to get a little too far over our skis, given how close we are to that incremental update.
Excellent. Craig, always great to have you on, and thanks for the update. Big movement, and we look forward to chatting again with further announcements.
Excellent. It's my pleasure, Rodney. Speak again soon.